Hey Samfam, this is Shriya from Samaya, MCQ 51, CA Inter. The suspectability of an assertion about a class of transaction, account balance, or disclosure to a misstatement that could be material, either individually or when aggregated with other misstatements, before consideration of any related controls. That is, we have got a doubt that an assertion could be a material misstatement. We'll see which of these among four is right. Control risk. Control risk is something that the internal controls were not efficient. Inherent risk is this the suspectability of an assertion that the misstatement could be material. Detection risk is something that the auditor forms an opinion which is not appropriate. Audit risk is summary of all these. So option B, inherent risk, is appropriate answer. Hey Samfam, this is Riya from Samaya, MCQ 52, CA Inter. The assessment of risk is a matter capable of precise measurement rather than matter of professional judgment. No, it's a matter of professional judgment. Yes, it's a matter of professional judgment rather than a matter of capable of precise measurement. Option B is right, and we'll see option C, the matter of professional judgment as well as capable of precise measurement. No, it is only a professional judgment, and option B is more appropriate answer. Hey Samfam, this is Shriya from Samaya, MCQ 53, CA Inter. The assessment of risk of material misstatement may be expressed in. You see, risk of material misstatement is like it's a matter of professional judgment and it could be expressed both in qualitative as well as quantitative terms. It could be expressed in quantitative terms like percentages here. They have mentioned as that there's a 70% chance that this misstatement could be material, and option A is more appropriate answer, both quantitative as well as non-quantitative terms. Hey Samfam, this is Shriya from Samaya, MCQ 54, CA Inter. SA 315 establishes requirements and provides guidance on identifying and assessing the risk of material misstatement at financial statement level only. No, at both financial and assertion level. At assertion level only, C. At financial and assertion level, yes. D, at financial statement or assertion level. You see, it's not an or, it's an and here. Make a note out of it. So, option C, both at financial statement level and assertion level. Hey Samson, this is Shriya from Samaya, MCQ 55, CA Inter. When credit purchases of 5,100 is recorded on credit side. You see, credit purchases have to be, because even though they were cash purchases or credit purchases, have to be on debit side. And credit sales of 5,100 is recorded on debit side. You see, whether it's credit sales or cash sales, it have to be on credit side. This kind of error is called error of commission is something they've wantedly done, like fictitious entries, etc. Compensating error is with the same amount they were, the debit and credit had got compensated. I think it's mostly B. We'll see other error of principle. Both, you see, something was not capital have converted into a revenue or to change its principle, so that it's not error of principle, it's not even error of commission. There's no such willfulness that was regarded here, so option B is more appropriate. Hey Sangam, this is Riya from Samaya, MCQ 56, CA Inter. If, as a result of misstatement resulting from fraud, the auditor encounters exceptional circumstances that bring into question his ability to continue performing the audit, he shall see whenever there is an circumstances or whenever there's a misstatement that questions the ability to continue performing the audit, what the auditor has to do, he has to withdraw the engagement. But when it's resulting from fraud, he has to check whether there were any responsibilities for him to report, because whenever there were frauds that were less than 1 cr, he has to report to the board, or 1 cr or more, he has to report to the central government. So with regards to fraud, whenever you find fraud, you have to report, you have responsibilities with regards to that in company audit. We'll see the options. Withdraw the engagement immediately. Yes, we could have immediately withdraw the engagement if there was limitation on scope or something. But if the fraud, we have to report to the audit team with regards to withdrawal. Not directly determine professional and legal responsibilities applicable in that circumstances. Yes, ask the management for withdrawal. We need not take permission from the management. We have to just inform them. If at all we have to take withdrawal in other cases. So option C is more appropriate. Hey Samfam, this is Riya from Samaya, MCQ 57, CA Inter. Which of the following is an example of inflating cash payments? Okay, making payments against purchase vouchers is just a normal payment. Teaming and ladding is mostly like a delayed accounting system, that is transferring amount from one customer account to another and not accounting for cash sale fully. It is like suppression of cash receipts, making payments again inflated vouchers. Yes, this is inflating cash payments. Option D is more appropriate. Hey Samson, this is Shreya from Samaya, MCQ 58 CA Inter. What are the types of errors which existence of which becomes apparent in the process of completion of accounts is known as apparent is something. What's the meaning of apparent is that is we could able to see that which is not true. Okay, we'll see what are type of errors. Self-revealing errors, yes. Intentional errors, it is not about seeing, right? Concealed errors we cannot see. Unconcealed errors we have to check between A and D. It's most appropriate as would be A because they are showing that, right? They're self-revealing. Option A is more appropriate answer. Hey Samson, this is Shreya from Samaya, Executive 59 CA Inter. Which of the following is incorrect? Option A. An auditor conducting an audit in accordance with SCs is responsible for obtaining absolute assurance. No. In the whole audit syllabus, we do not find a word called absolute assurance. Always the auditor does audit to obtain reasonable assurance that the financial statements taken as a whole are free from material misstatements which are whether caused by fraud or error. So option A is incorrect. Option A is appropriate answer. Hey Samson, this is Priya from Samaya, MCQ 60 CA Inter. The factor which distinguishes an error from fraud and other irregularities. You see, that is something that was done intentionally by employees or management or TCWG or any other person in the entity, whether it's caused by fraud officer of the entity or employee of the entity. No, it doesn't depend upon that. Error can be done by any personal intention. Yes, we are talking about that. Fraud is something that was done intentionally. Option B is more appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 61 CA Inter. Reporting on fraud is to be made by an auditor to central government when fraud amount is exceeding 10 lakhs, exceeding 50 lakhs, exceeding 1 CR, 1 CR or above. It is not exceeding, that's not something exceeding. It is when it touches 1 CR, you have to report to the central government. First, what? You have to communicate with the board or audit committee and take the responses of them and then submit to the central government. Option D is more appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 62 CA Inter. Reporting on fraud is made by auditor to central government in statement in form ADT 1. ADT 1 is used for appointment of first auditor, it's not ADT 1. ADT 2, it is used when a company to intimate ROC for remover of the auditor, it's not that. ADT 3, ADT 3 is used when the auditor resigns to intimate to the central government. ADT 4, ADT 4 is something that it has to be filed within 60 days if he found that auditor found that a fraud had happened in the company. So option D is right answer. Hey Samfam, this is Shreya from Samaya, MCQ 63 CA Inter. Reporting on fraud is made by auditor under which of the following clause of para 3 of CARO 2020? Option A, clause 11. Yes, reporting on frauds is done under clause 11. We'll see this is the right answer, but we'll see the other questions also. Clause 12. Clause 12 is reporting of Nidhi entities, and clause 13 is reporting of related party transactions. Clause 14 is reporting of internal audit. So option A, clause 11 is reporting on fraud. So this is the right answer. Hey Samfam, this is Riya from Samaya, MCQ 64 CA Inter. Which of the following is a general IT control? IT environment. IT environment is not a general IT control. Option B, application control. Application control is a type of control, indirect controls or pervasive controls. Access security is a type of general IT controls. Option D, IT dependent controls is a type of indirect controls. It is not an part of our general IT control. So option C, access security is a type of general IT control. What are general IT controls? General IT controls were program change, application system acquisition, development and maintenance, data center and network operations, and access security. Out of this four, access securities we have got here. So this is the general IT control, option C. Here's some from the Sistria from Samaya, MCQ 65 C8. Which of the following is an automated control? Program change. Program change is a general IT control. System B, system generated report. It's not a control, it's actually a reporting process. Option C, application control is a type of internal control, indirect control. Option D, configurations were automated controls. So option D is more appropriate answer. Cynthia from Samaya. This is creator, who is mainly responsible for implementation of internal financial control. First, we'll see the difference between controls, internal controls, and internal financial controls. Internal controls were all the rules and regulations in a company, like biometric attendance or like attendance near the gate, everybody. And internal controls were specific rules in the company, like taking approval from the management. That is, internal controls were followed by the personnel in the company. Internal financial controls were specific rules and regulations that put in place that all the financial information to prepare the financial statement was accurate. That is, like accessing the accounting records was given only to few. And with that said, who could implement the internal financial controls? Who? Directors. Management has the responsibility to implement the internal controls or internal financial controls and make sure they prepare the financial statements as per applicable financial reporting framework. Option B, directors, the right option. Hey Samfam, this is Shriya from Samaya, MCQ 67 CA Intern. The guidance note on audit of internal financial controls over financial reporting has been issued by. It was issued by ICAI. Option A. SEBI, it was mostly deals with the stock exchange, the companies that were listed in stock exchange. MCA with regards to the RSC compliances, RBI with regards to some banks and other money related matters. With regards to financial reporting, ICAI gives guidance note. Option A, ICAI is the right option. Hey Samfam, this is Rio from Samaya, MCQ 68, EA Inter. The standard that requires auditor to analyze journal entries in an audit is SA 260 deals with communication with TCWG. And with regards to that standard, what he has to do, he has to communicate timely. Those were the timely manner to the TCWG. That is what the objective of the auditor there. SA 230 is about audit documentation. It is like maintaining the final assembly of the audit documentation and all. With these all with regards to the SA 230. SA 315 is identifying and assessing the risk of material misstatement through understanding the entity and its environment. Here, what do they do? They assess the risk of material misstatements and all with regards to internal controls and all. It mostly deals with that, not journal entries. SA 240, that is auditor's responsibility when he finds a fraud in the audit of financial statements. When you when you find any fraud, then you analyze the journal entries. For the detailed explanation, or please do check out the audit pronouncement revision. You could get that. There was a specific objective with regards to analyzing the journal entries, obtaining sufficient and appropriate audit evidence with regards to the risk of fraud. Option D, SA 240 is where auditor analyzes the journal entries when he finds a fraud in the audit of financial statement. Hey Samfam, this is Ria from Samaya, MCQ 69 CA Inter. In WH Limited, every business activity was carried out manually. The top management decided to change the business environment by using computers and computer systems. That change of the business environment is an example of a operational environment, computational environment, control environment, automated environment. You see, all the business and business activities have been automated by use of computer system. Option D, automated environment is more appropriate answer. Hey Samfam, this is Shriya from Samaya, MCQ 70 CA Inter. Which among these are also known as pervasive or indirect control? As what we have discussed in our revision of automated environment, that general IT controls are pervasive or indirect controls. These three were types of controls, under which general IT controls, also known as pervasive controls or indirect controls. Under types of controls, general IT controls, application controls, and IT dependent controls. So option A is most appropriate answer. Samsung is Priya from 71 enter, which is a combination of process, tools, and techniques that is used to tap vast amount of electronic data to obtain a meaningful information. That was, as we have discussed, those were data analytics. When these data analytics were used by auditors, they are known as CATs. The correct option is data analytics. When the data analytics were used by auditors, it's known as computer assisted audit techniques that were CATs. Automatically, someone, this is Shreya from Samaya, MCQ 72, CA enter. Which among these are manual or automated procedures that typically operate at business process level and apply to the processing of individual applications. This is the definition of application controls in automated environment. Now we'll see the definition of application controls. They include both automated or manual controls that operate at a business process level. They are embedded into IT applications and help ensuring the completeness, accuracy, integrity of data in those systems. So option A is most appropriate answer. Hey Samsung, this is Shreya from Samaya, MCQ 73, CA Inter. Which among these are the manual controls that make use of data or information or report that was produced from IT systems and application, that is they were dependent on IT. Application B IT dependent controls. Yes, these were the IT dependence control. That is the definition of IT dependence controls. You can see not automated controls, not general IT controls. You can see the definition here. IT dependent controls. They are manual controls which make use of data information report from IT systems and applications. Its design and effectiveness depends upon the reliability of the source data. And so option B is the most appropriate answer. Hey Samsung, this is Shreya from Samaya MCQ 74 CA Inter. Which among these is a logical subsystem within a larger information? That is, they are talking about something a data set out of the data population, where electronic data is stored in a predefined form and retrieved for use. That is, there either could be data mining, data warehouse, database, data analytics. This is the definition of database, a logical subsystem within a larger information system where electronic data is stored in a predefined format and retrieved for use. So option C, database, the most appropriate answer. Hey Samsung, this is Shreya from Samaya, MCQ 75, CA Inter. Which among these is a control deficiency or a combination of deficiencies in internal controls that is important enough to merit the attention of those charged with governance, since there is a reasonable opportunity that a material misstatement will not be prevented or detected in a timely manner? First, we'll see what are these. Material weakness. Material weakness means deficiency of internal controls. That is what they are talking about. There's a deficiency in the internal controls which would not prevent or detect the material misstatements. So, option A is the most appropriate answer. We'll see the other options also. What is material deficiency? Whenever there's a word deficiency, it's talking about a misstatement in the accounting records or with regards to the money. But what's the difference between material deficiency and significant deficiency here? Material deficiency is a deficiency in the accounting records. That's a misstatement in the accounting records. What is a significant deficiency is that the way the management is handling the money there. The like taking unusual transactions or complex transactions, etc. Control risk, as we all know, that there could exist a material misstatement in financial statements due to internal controls. So option A, material weakness, is the most appropriate answer. Hey Samsung, this is Priya from Samaya MCQ 76 CA Inter. Which among the following is required to comply with Section 149(8) read with Schedule 4 of Companies Act 2013? What does Section 149(8) talks about? It talks about that the listed entities shall have at least one third of independent directors. So it talks about the independent directors. That is option D. Independent directors is the right answer. Hey Sampham, this is Priya from Samaya, MCQ 77. CA Inter. Which of the following audit testing methods is most effective as an audit test and gives the best audit evidence? Inquiry. Inquiry is that inquiring other parties. Observation is observing the process of the entity. Inspection. Inspection of any documents. Option D. Reperformance. Reperformance is doing the or walk through the process. The author. Reperformance gives best audit evidence. Option D is most appropriate answer. Hey Salva, this is Shreya from Samaya, MCQ 78, CA Inter. User training is an activity relating to which of the following general IT controls, whether it be data center and network operations, program change, access securities, application systems acquisition, development, and maintenance. Out of this four, the persons who are using that or need to get training. When there was a program change, we have to give training to our employees or personnel for that program change. Program change is like the system or software change. Option B is the most appropriate answer. Yes, Sampham, this is Shreya from Samaya, MCQ 79, CA Inter. The objective of establishing security policies and procedures, that is, they are securing something, that is like password protection or user ID protection or keys protection, is to ensure that the production systems are processed to meet the reporting objectives. No. To ensure modified systems continue to meet the financial reporting objectives. No. It's regarding security. To ensure that the access to programs and data is authenticated and authorized to meet financial reporting objectives. This is the most appropriate answer. Option C is the most appropriate answer. Hey Samson, this is Shreya from Samaya, MCQ 80, C8. IT-related risk, if not mitigated, may impact on substantive audit procedures, controls of the entity reporting, all of the above. IT-related risk do obviously affect the audit procedures and the internal controls in the entity and the reports that were extracted from the IT programs. So option D, all of the above, is the most appropriate answer. Hey Sampham, this is Ray from Samaya, MCQ 81, CA Inter. Which of the following audit testing methods gives the least audit evidence? Inquiry, inspection, observation, reperformance. It is inquiry. Why? Because it is auditor gains the knowledge that is from the other party's experience or other party's knowledge. So this is which gives the least audit evidence. It's highly influenced on third parties. Which gives the best audit evidence? It is a reperformance. Auditor gains knowledge about the entity or the matters through his own activities or his own performance of the activities. Option A gives inquiry gives least audit evidence. Hey Sampham, this is Shreya from Samaya, MCQ 82, CA Inter. Applying out of all these four options gives the most effective. Effective is like desired results, the results that we wanted. Efficient audit evidence. Efficient is economical, that is with lower cost while using audit testing methods. Inquiry with a combination of inspection. We know that inquiry gives the least audit evidence, least reliable audit evidence, but with the inspection, it gives most effective and efficient audit evidence. Option A is the most appropriate answer. With the other options, inspection with combination of observation, observation in combination of reperformance. We know that reperformance gives the highest degree of desired audit evidence, effective audit evidence. Reperformance in combination with inquiry. So we have to, though reperformance gives the most effective audit evidence, but it is not economical. That is, it is not efficient. So option A, inquiry plus inspection gives most effective and efficient audit evidence. Option A is the most appropriate answer. Hey Sampham, this is Shreya from Samaya, MCQ 83, say enter. Dash are needed to support the functioning of dash. Have you heard this somewhere before? In automated environment, as with regards to if you see the options here, it's all relating to the types of controls and etc. We'll check that. In general IT controls are policies and procedures that related to many application and support the effective functioning of application controls. That is general IT controls and application controls. General IT controls are needed to support the functioning of application controls. Option A is the most appropriate answer. Hey, Samsung, this is Shreya from Samaya MCQ 84 CA Inter. The main advantage of using statistical sampling techniques is that such techniques mathematically measure risk, eliminate the need of judgmental sampling, defines the value of tolerable error, all of them. First, we'll see the definition of the statistical sampling techniques. The statistical sampling is an approach to sampling that the following characters, that it has following characters. Random selection of sample items. Here they are saying in the B option, eliminate the need for judgment sampling. So it is not that, right? Even in its characteristics, it's saying that there's a random selection has to be done, so the judgmental has to be there. So option B, eliminate option B, and defines the value of tolerance and risk, right? The use of probability theory to evaluate sample results, including measurement of risk. They're talking about it will measure risk. So option B, option A, mathematically measure risk. Option A is the most appropriate answer. In the definition, it do not talk about the tolerable error, and option D is not a valid option. So option A is the most appropriate option with respect to the definition of statistical sampling techniques. Option A is right. Samsung, this is Priya from Samaya, MCQ 85 C Inter. Which of the following factors are to be considered in determining the sample size for tests of control? What all the things you have to consider? You have to whether you have to consider projected error, tolerable error, expected error, both B and C. You have to consider the expected error, that is how much of error that you are expecting, that like risk of material misstatement. In order to sample size, you are expecting the expected error. Second thing is like performance materiality. Here the tolerable error, up until this, it is until such a fixed amount or fixed parameter, that error is tolerable. So both option B and C have to be considered. Both the expected error and tolerable error has to be determined while determining the sample size. Option D, both B and C is the most appropriate answer. Yes, Samsung, this is Ria from Samaya, MCQ 86 CA Inter. Tolerable error is the maximum monetary error that the auditor is prepared to accept in the population and still continue that audit objective has been achieved, is directly related to. Tolerable error is such kind of monetary error that the auditor is accepting that to exist in the audit population or with regards to the audit process, so that he could obtain a reasonable assurance. And that tolerable error is directly related to sample size, audit risk, materiality, expected error. It is directly related to materiality. You see, when there's a larger amount of sampling size, you cannot expect the tolerable error to be high. And when there's a more risk, you cannot accept more tolerable risk. When it's more materiality, you could accept more tolerable error. When you are expecting errors would be more, you cannot have a tolerable error more. So option C is the most appropriate answer. Hey Sampam, this is Riya from Samaya, MCQ 87 CA Inter. Which of the following is a source of non-sampling risk? That is, those were the risks which occurs or which was caused due to not sampling. There's non-sampling risk, human mistakes. There's nothing to do with sampling there. Applying procedures that are not appropriate. There's nothing to do with sampling also there. And misinterpreting the sample results. All the sampling has been done, but they were misinterpreting the results. So there's also nothing to do with sampling there. So should be all of the above is the most appropriate answer. Hey Samfam, this is Riya from Samaya, MCQ 88 CF Inter. Which of the following is more scientific? Statistical, non-statistical. You see, this is a very simple question, but they have made it difficult by not giving a word. That's the only thing you have to do it here. It is so impulsive that audit sampling, you have to find out from which topic this MCQ has come. It is with regards to audit sampling. If they would have given the audit sampling word, it is so easy. Since they haven't given, if they are testing us, the overall conceptual understanding with regards to for the identifying that topic. Option A, statistical audit sampling is more scientific way. Option A is the most appropriate answer. You have to identify that it is from the topic audit sampling.
This sum from this is from Samaya MCQ 89 CA Inter. As the number of transactions are very large in while limited, the auditor is using audit sampling with regards to repairs and maintenance expenses. And he wished for the entire data before such sampling. What all that data should have the three characteristics, whether it should be simple, complete, and relevant, or reliable appropriateness. You see, all the adjectives for a data were appropriateness, it has to be appropriate, it has to be complete, and it has to be reliable. Option D is the most appropriate answer. Why not relevant? Because relevant is when you compare both expenses, or when you compare two different kind of information. Like if when you're comparing the asset age or machineries with repairs and maintenance expenses, then that could be a relevant factor, because that asset condition and this repairs and maintenance expenditure were relevant for that. Completeness, yes, we have to be complete. Simple. They have given a cash here. Audit sampling could not be simple. If you have taken this three characteristics with regards to audit sampling, you might get a catch here that it would be simple. No, it have to be appropriate. Appropriateness, completeness, and reliable. Option D is the most appropriate answer. These sample this is Shreya from Samaya MCQ 90 C enter. In random sampling, each item of population has an equal chance of selection. Yes. We'll see other options also has varying chance of selection depending upon placing of items. No, may have a chance of selection based on auditor's professional judgment? No, they have an equal chance of selection in the population. All of these, the option A is the most appropriate answer. Equal chance of selection in a random sampling method. This sample is here from Samaya MCQ 91 CA Inter. The relationship between tolerable error and sample sizes. It is always an inverse relationship. You see, tolerable error is that percentage that you wanted or you're willing to be wrong, that is you're accepting that it could be a wrong without compromising to the auditor's reasonable level of assurance or auditor objective. If you're taking only sample size as a 2 and your tolerable error is more, because it could be wrong in a huge population like 1,000 units, right? So, tolerable error and a sample size has an inverse relationship. More the sample size, the information will be more accurate. So, the error reduces. So, option A, inverse relationship is between tolerable error and sample size. This sample, this is Shreya from Samaya MCQ 92 CA Inter. Statistical sampling has the following characteristics. We'll see the definition of statistical sampling here. Statistical sampling, an approach to sampling that has following characteristics: random selection of sample items and use of probability theory to evaluate sample results. And we'll see the options here as it has random selection and uses probability theory, and it's not a judgmental approach. So option C, both A and B is the most appropriate answer. This sample, this is Ria from Samaya MCQ 93 CA Inter. When significant risk has been identified by the auditor, then the audit evidence obtained solely from the substantive analytical procedures is sufficient. Audit evidence obtained solely from substantive analytical procedures is unlikely to be sufficient. Auditor will perform test of details also. Option D, both B and C. When there's more risk, you have to also do tests of details. What are tests of details? Test means even checking the little things like all the invoices, receipts, vouchers, and goods returns, notes, etc. So when there's a more risk, even tests of details also have to be done. Substantive procedures were like comparison of financial information. Analytical is comparison of financial plus non-financial information. Not only comparison, you have to also do tests of details. So option D, both B and C is the most appropriate answer. This sample, this is from Samaya MCQ 94 CA Inter. Substantive analytical procedures are generally more applicable to when there were large volume of transactions predictable over time. A and B, none of both. A and B. You see, substantive analytical procedures were like comparison between financial statements, right? Financial information that the auditor has obtained, where the risk was lower. When the risk was lower, plus the transactions were vast. So they can use some ratios or compare financial and non-financial information. So option A, when there was a large volume of transaction and when they were predictable over time, that is, those transactions were not unusual transactions or complex, which were not predictable. So they're predictable over time, and that is the risk was lower. So both option A and B were right. So option C, both A and B is the most appropriate answer. Please confirm this is here from Samaya MCQ 95 CA Inter. Which among these is a comparison of current data with prior period balance? That is, they're analyzing in between few time periods. Ratio analysis, it's not with regards to ratio analysis. Ratio analysis is something in the same time frame but with different information, different financial information. Trend analysis, yes, trend analysis is something that compares the information, single information over a period of time. So option B is most appropriate answer. Please confirm this is Shreya from Samaya MCQ 96 CA Inter. Statement 1. Analytical procedures are more useful while conducting the audit and at completion phase, and there's no use at planning stage. No, even analytical procedures were used with regards to planning stage, like they compare the information with regards to industrial standards or other competitors of the entity. It is so option statement 1 is incorrect. Even analytical procedures were used in planning stage. And in planning stage, the audit procedures assist the auditor in understanding the client business and identifying the areas of potential risk. They're talking about as a 300 series, understanding the client's business environment and identifying and assessing the risk of material misstatements. So option statement 2 is correct here. So out of all the four options, only statement 2 is correct. So option D is most appropriate answer. Please confirm this is Priya from Samaya MCQ 97 CA Intel. What are analytical procedures? As we know, analytical procedure is comparison of financial and non-financial information. We'll see the options now. Substantive test designed to assess control risk. No. To evaluate the validity of management's representation letter. No. They are the tests designed to study relationship between financial and non-financial data. Yes, option C is the most appropriate answer. It's not all of the above. Please confirm this is Shreya from Samaya MCQ 98 CA Inter. Which of the following is not an analytical procedure? Analytical procedure is something that compares financial and non-financial information. We'll see the options now. Tracing of purchases recorded in purchase book and to purchase of invoices. This is the comparing the financial information again with the financial information here. So it's not an analytical process. So option A is most appropriate answer. We'll see other options. It is like aggregate wages paid to the number of employees. It is like comparing financial information to non-financial information, that is employees, number of employees. So it's an analytical procedure. So option C is comparing actual cost with standard cost. You see, these tend to be like financial statements, but these were the targets. These targets were doesn't exist in the financial statement. So this is a non-financial information. This actual cost was the financial information that had been occurred by the entity. These were just the numbers of the targets that were given by the management. So it is not option D. Option A is the most appropriate answer, which is not an analytical process. Please confirm this is Shreya from Samaya MCQ 99 CA Inter. Analytical procedures issued in the planning stage of an audit. Generally, what do they do? How they help to determine nature, timing, extent of audit procedures. Yes. Direct attention to potential risk areas. Yes. Analytical procedures were like comparison of financial and non-financial information so that it would create or help the auditor to plan the audit procedures and to focus more on the important areas or risk-based areas. Option C indicate important aspects of the business. Yes. Option D, all of the above. All of the above is the most appropriate answer. Please confirm this is Shreya from Samaya MCQ 100. The enter. The basic assumption underlying the use of analytical procedure is option A. It helps the auditor to study relationship between financial information. No, financial information plus non-financial information. So option A is not right. Relationship among data exists and continue in the absence of known condition to the contrary. Yes. Analytical procedures will not be able to detect unusual relationships. No, analytical procedures detect relationships, unusual relationships. So option C is not right. Option D is not right. So option B is the most appropriate answer.